Well, we look forward to talking to you about our ag commodity markets. Today, I'm Marlon Bowling, your tour guide to these ag commodities. And here on this Monday morning, I am joined by Brian Hoops. He's the president of Midwest Market Solutions, and he is based in Springfield, Missouri. Brian, I see just hot off the wire just a moment ago as I was coming down to the studio. We had an overnight export sale to talk about. Let's see what it is and open it up. It's like Christmas morning. Here we go. It's corn. And it was sold to Mexico, 426,800 tons. The good news is, Brian, that's a large amount, and to one of our regular customers, Mexico. But I guess some folks might be disappointed that China is still not bellying up to the bar, as they would say, to buy some U.S. grain. And it's been kind of few and far between here lately.
Yeah, good morning, Marlon. Yeah, we talk about those export sales we've had recently, and there has not been much. The last 3 weeks or so, we've had 4 sales. 3 of them have been corn, 2 have been to Mexico, and only 1 soybean sale to China. So it is a little bit of a disappointment to the trade. You know, they are looking for China to step back in here and aggressively be buyers of soybeans, and that has not happened. They've been buying cotton very aggressively, and you can see what happened to the cotton market. It's shot over $1 a bale for the first time in 10 years. But the demand for soybeans has not been there. They've not bought very much wheat either, so their purchases are lagging what they normally should be. This is the time of year that China is usually a very aggressive buyer of U.S. soybeans. They try and book those needs throughout, at least through the winter months into the spring time frame when South American supplies are becoming available. But it appears that China is not interested, even at these prices that are testing new lows overnight in the soy complex, of stepping in and buying much soy products.
Brian, if you had to venture a guess, what do you think we would be at for harvest progress when that new report comes out this afternoon?
Yeah, the trade should be looking at, winter wheat seedings to be around 50% complete. The corn and soybeans probably going to advance another 10 to 12% compared to a week ago. So we're looking at in the 30s for corn harvest, 32, 33 probably, soybeans 24, 25% at least being harvested. I drove into South Dakota last weekend, and there's still a lot of crop between Missouri and South Dakota sitting on the fields. There's some have been combined, but a lot of areas leaves are just starting to turn in the soybeans fields. So there's still a tremendous amount of product in the western belt to be harvested.
Well, let's look at the current overnight trade as we wrapped up Globex December corn down 2.5 cents at $5.39 per bushel. On the soybean trade, looking at November, we were down 7.75 cents at $12.38 So weakness across the board in that soybean pit. Over to the wheat. Wheat had quite a week last week, and we had December Chicago wheat 1/4 cent higher as all overnight at 7.55 so getting kind of quiet there for a change. In the Kansas City trade, you had December last night 2.25 lower at 7.57 Our Minneapolis spring wheat market at December at 9.28, that was down a penny. And on the cotton, we were higher again. Wow, December up to 106.15 cents per pound. That's up 162 points. Wow, we'll be back in just a moment. We'll take a look at our livestock trade here on a Monday with Brian Hoops. Come on back. Let's go back to Brian Hoops and see what he thinks we may see on our livestock trade today. Brian, when we wrapped up last week on Friday on the livestock summary, there didn't appear to be very much business that took place on Friday. I think the only thing we had was some limited trade on the dressed at 192 to 196, I believe, and basically that's about flat with what we had the week before. So I take it business was pretty well all wrapped up by the time we got to that Friday report.
Right. Yeah. We've cleaned up the trade earlier in the week, and this week we're looking at more of a steady market to start the week off. Option expiration against the October futures was Friday. Now we have first notice day today. Really, there's no threat of deliveries against that October board. I'd be very, very surprised if anyone delivered. It looks like we're underneath the cash markets. And that was quite a range last week, but I don't think you'll need to see any type of deliveries against the October board. There's some talk that we've cleaned up some of these heavier weight cattle, and that would be a blessing if we were able to. There's some heavier in Iowa and parts of Nebraska, and that's why we've seen softer dress trade in those areas. And if we can get through these heavier weight cattle, weights start to come down, I think we could see a rebound in this cattle market. We're certainly oversold enough that we should see some sort of a correction in here. And if we do see rallies, those are likely to be hedging opportunities once again in some of these December, February contracts.
Well, we can see that we wrapped up on Friday with that December contract down 52 cents at 125.20 per hundredweight. Did you see the beef cutout update Friday afternoon from USDA? Excuse me. Boy, they were down again. Look at this. Choice cuts down 262 at 292.36, and then you had selects going down 448 at 264.84. The downward pressure continues. And Brian, again, I like to compare to the week before on the choice, where it's 292 now. A week ago, it was 303. It continues to drop at a rate of about double digits per week here.
Yeah, that's an unfortunate thing. We need to see these cutout values stabilize and need to see some demand come back in. The load counts have not been real stellar, but if we could start seeing better loads, load counts improvement, then we can see the cutout values also stabilize, and that would help out our cash markets. It would just really help everything out. But so far, we've not seen that. We had hoped that the $300 mark would offer us a glimmer of support, and we kind of blew through that last week, and now trying to reach a new level that will stimulate some better demand.
Let's look at how we finished up in feeder cattle on Friday, and we'll see if this lower corn market overnight will have any impact here on the feeders today. We finished up with the October 20 higher, but you had November unchanged heading into the weekend. It finished at 152.90. The deferreds were actually about 30 cents lower if you go beyond that. And on the lean hogs, we wrapped up Friday's trade mixed. We had October up 70 cents, but the active December down 22 at 85.17 per hundredweight. The far out deferreds were a little higher. Well, Brian, thanks for the time this morning. Always good to visit with you. Appreciate the help. Brian Hoops of Midwest Market Solutions. Janet, we are about ready to begin.